Welcome to Introduction to Accounting 2. Let's get started. In our last video, we defined accounting as the language of business. We want to build on that definition and understand the accounting process. Accounting captures economic events and communicates the result of these events in accounting reports. For example, an economic event could be, the bank gave me $1,000, but I have to pay it back later. The accounting report that summarizes this economic event would consist of cash of $1,000 and note payable also of $1,000. The note payable reflects the fact that I have to pay the bank $1,000 in the future. The cash reflects that I have $1,000 that the bank just gave me. Now we'll bring the decision maker into the process. The decision maker enters into an economic event. That economic event is captured by the accounting system, and then the accounting system produces accounting information that is in turn given back to the decision maker to aid in future decisions. For now, we're viewing the accounting system as a black box, but over the next few slides, we're going to start to open up that black box and understand what's inside. First, we want to know that the accounting system consists of the people, the processes, and the technology that's necessary to capture economic events and produce accounting reports. There also is just one single accounting system for each business, and that single accounting system produces financial accounting, managerial accounting, as well as tax accounting. The accounting system is unique to the business. If the business is small and simple, the accounting system will be small and simple. If you've got a slightly larger business, the accounting system would likely be larger and more complex as well. Lastly, if you have a large, complex, multinational business, the accounting system would be designed to reflect the needs of a large multinational business. Each business is unique, and the accounting system is uniquely designed to fit the needs of that business. The accounting system also considers cost versus benefit. This means that when we design our accounting system, we don't want the cost of producing information to exceed the benefit of having that information. There is one caveat: legal and regulatory considerations override any cost-benefit analysis that we might do. We're obligated to comply with any legal or regulatory considerations that are applicable to the business. Now we know that the accounting system captures economic events and produces accounting reports. Let's take a more careful look at what goes on inside the black box. First, the accounting system interprets the economic event. That's really the hardest part of accounting, is interpreting what just happened. Next, the accounting system records the event, properly classifies it, then summarizes the accounting events, then communicates the accounting events in accounting reports. So the accounting system will interpret, record, classify, summarize, and communicate. The final product of the accounting system will be the accounting reports that are provided to the decision makers. Internal control is very important in an accounting system. Internal control consists of the policies and procedures that are dedicated to the production of reliable reports, compliance with laws and regulations, and the efficient and effective business operations. Internal control is important for tax, managerial, and financial accounting. In all of these areas, we need reliable reports that comply with laws and regulations to help us with an effective and efficient business. The components of internal control start with the control environment. The control environment really consists of management's philosophy and operating style. It includes the ethics and competency of top management. Next, we have risk assessment. Risk assessment identifies any area that would threaten the production of reliable reports, lack of compliance with laws and regulations, or even threaten the efficient and effective operations of the business. After we identify our risk, we can establish control activities to minimize those risks. We collect information from our internal control system and communicate that information to the relevant parties. Finally, the internal control system needs to be monitored. To review, we've established that the accounting system should be designed to meet the needs of the user. The accounting system includes the people, process, and technology that's necessary to capture, interpret economic events, record, classify, and summarize economic events, and prepare reports and communicate the results of these events. The system of internal controls include the policies and procedures that are necessary to produce reliable reports, comply with laws and regulations, and run effective and efficient operations. The components of internal control include the control environment, risk assessment, control activities, information and communication, and finally, monitoring. Now let's answer a few questions. Which of the following best describes the accounting systems of most business organizations? Well, we know that there are some common goals of accounting systems, and we also know that all accounting systems are designed to meet the needs of the users. They're not all the same. So with that in mind, let's take a look at our options. Option A, accounting systems are designed to meet the needs of the business organization. Sounds pretty good. All accounting systems are identical. We know that's certainly not true. Accounting systems only use publicly available data. That's not true. Accounting systems must be designed by a CPA firm that performs the annual financial audit. That's not true. And in fact, most of the time, if not all the time, the CPA that performs the audit should not have designed the accounting system. Our best answer is A, accounting systems are designed to meet the needs of the business organization. Our next question, which of the following best describes cost-effective? Cost-effective relates to the cost-benefit principle, which means that the cost of producing information should not exceed the value of that information. So if we look at our choices, information is cost effective if it helps management in controlling cost. The information is generated by a computer-based accounting system. Information is cost effective if it is based on historical cost, or information is cost effective if the value of producing the information exceeds the cost of producing it. So option D is the one that's consistent with the cost benefit principle. So our best answer is option D. Next question. Which of the following is not an objective of the system of internal controls? So be sure to notice the word not. We're looking for which is not an objective of the system of internal controls. Produce reliable reports. Yes. Comply with laws and regulations. Yes. Guarantee profitability. Internal controls can't do that. Run business effectively and efficiently. That's a goal of the system of internal controls. So the one that's not is option C, guarantee profitability. So our last question, why is accounting cool? Now we know that accounting helps people make better decisions by producing relevant and reliable reports. By having this information, accountants rule the world.